Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two monster growth stocks that could reach new highs. Now, these are two stocks that have seen a lot of great growth lately, and both come in with a strong buy rating from analysts and double-digit upside potential. So we're going to take a look at what it is these companies do and what analysts are predicting for their stock's future. And just before we get into those two companies, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. I always love hearing from you guys. And keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. Okay, now let's get into these two monster growth stocks. The first company we're taking a closer look at today is EMCOR Corporation. They trade under the ticker EMKR and are currently priced at $8.08 per share. Since the start of the new year, this stock is up over 50%. And it comes in with an outperform rating of 9 out of 10 on the TipRanks Top Smart Score. This is based on positive technicals, very bullish news sentiment, and bullish blogger opinions. EMCOR Corporation works at the crossroads of the tech and defense industries. They are a producer of advanced mixed signal products in both optical and micro electromechanical systems, or MEMS, a technology that supports a range of aerospace and defense systems, especially in navigation, inertial sensing, 5G wireless infrastructure, cloud data, broadband transport, and optoelectronics. Within mixed signal devices, EMCOR is among a small number of suppliers worldwide, and they bridge the analog physical world with digital computing and communications. They focus on two business units with their aerospace and defense and their broadband, and revenue comes pretty much 50-50 from these two sources. Their CATV optical products, which is about a $100 million market, supplies optical transmitters and laser modules to OEMs for high-speed communication networks. On the aerospace and defense side, they have their inertial navigation, which is over a $3 billion market. They work on the development and manufacturing of sensors for use on aircraft, unmanned vehicles and drones, submarines, targeting platforms, and weapons. On the A&D side, some of their notable customers are Raytheon Technologies and Lockheed Martin, and on the broadband side, they have CommScope, Cisco, and Telest. They recently shared their Q2 of 2021 earnings reports, and notably, their last 5 earnings reports has all shown revenue with year-over-year growth. In their most recent quarter, EMCOR showed $38.4 million in top-line revenue, which was up 60% from the year-ago quarter. Their earnings per share, which was negative back in the second quarter of 2020, was given as a positive 13 cents per share in this recent report. One analyst covering the stock is Richard Shannon from Craig-Hallum. And he writes that we think every microcap investor, growth and value, should own this stock. EMCOR's OPEX can maintain near current levels for some time. So with sales growth and GM leverage, we see significant earnings leverage for several quarters. With multiple shots on goal, including LiDAR, earnings power, and a stock trading below 1x fiscal 2022 sales and at just 6x fiscal 2022 earnings per share, this is our favorite microcap idea. So clearly some very bullish sentiment there from him. Now, he is among 3 other analysts that currently have ratings on the EMCOR stock. And they all come in with a buy rating with an average price target of $10, which would be a 24% potential upside. Now, we have one buy rating from 13 days ago that we've already surpassed that price target on, so it's now showing as a slight downside. The other 2 ratings come in with a split between 11% upside and 60% upside from Richard Shannon at Craig-Hallum with his $13 price target. The second company on our list today is International Game Technology. They trade under the ticker IGT and are currently priced at $22.21. Now, this company has seen over 45% growth since the beginning of the year, with a good portion of that happening lately in May. And their stock does come in with an outperform rating, scoring 10 out of 10 on the TipRanks Top Smart Score. We have very positive TipRanks investor sentiment along with very bullish news sentiment, increased hedge fund activity, and positive technicals. Now, as the company's name may suggest, IGT is in the gaming industry. They're actually the world's leading designer and maker of casino slot machines. They also provide gaming machines, electronic lotteries, and digital and social gaming. IGT's operations are worldwide, in more than 100 countries, in government and private lotteries, sports betting, digital gaming, and of course, traditional brick-and-mortar casinos. In their most recent earnings report, they're seeing strong player demand with accelerating momentum in gaming, both for slots and digital and betting activities, as well as record lottery sales fueled by double-digit gains across games and regions. They are investing to support growth and maintain leadership positions across their three main verticals. This includes iGaming, where they plan to expand their content portfolio and maintain a 20 to 30% market share of the US, as well as iLottery, where they plan to build out portfolio games, and US sports betting, where they want to maintain the status as the most widely used land-based platform. Now, taking a look at the numbers from their Q1 earnings report, they achieved among some of the highest revenue and profit numbers ever. They showed quarterly revenue of $1.015 billion, up 14% from their previous quarter. Additionally, their Q1 marked the first quarter in over a year that their revenue grew on a year-over-year basis, gaining 8%. The company noted global lottery performance, a recovery in global gaming, and acceleration in digital activities as drivers of the higher revenue numbers. The company's earnings showed an even stronger recovery at 45 cents per common share. Their earnings per share was positive for the first time since Q3 of 2019. Covering this stock is five-star analyst Carlo Santarelli from Deutsche Bank. And he said that IGT delivered another resounding beat, driven primarily by material outperformance in the lottery segment, as lottery revenue grew 42% year-over-year on a constant currency basis. We would note, as it pertains to gaming ops, that IGT is more subject than peers given the geography of key parts of their install base to restrictions in the first quarter of 2021, and as such, we believe yields can accelerate considerably moving forward. We believe IGT remains the most attractive risk-reward in our coverage universe, which should attract value-oriented investors. The international game technology stock currently has 4 analyst ratings. And once again, they all come in as a buy. The average price target of $28.50 would be a 28% potential upside. Looking at our detailed list of analysts, 2 of those ratings are a couple months old, both at $25 for about a 13% growth potential. The more recent ratings, coming from 6 and 8 days ago, both came in at $32, which would be a 44% upside potential. So there are 2 stocks that have seen fantastic growth already this year, but analysts still believe there is more growth to come in their future. Now, I always love hearing from you guys, so make sure to let me know your thoughts on these 2 companies in the comments down below. Don't forget to tune in at 1 p.m. Eastern Standard Time to catch Richard Allen's midday market update, and every morning before the opening bell for my pre-market update, so you can stay up to date with everything happening. Thank you guys so much for watching, and we will see you back here next time.